Good morning and welcome to our newest webinar. This one is going to be on trends in cybersecurity. Specifically, we're going to have two presenters today. Sam Mays is going to talk through some basic best practices surrounding cybersecurity. For anyone who's not super familiar with it, he'll kind of do a quick little introduction on it. And then we have Anthony DeGraw from Meeker Sharkey Hurley here. He's going to talk through a little bit more on the insurance side, what you should be doing in terms of cybersecurity, what you should be looking for. I'm sure most of you have some type of policy surrounding it, but he'll kind of talk through, if you have a policy, is it right? Does it contain everything you need to have in it? All that kind of stuff. A couple housekeeping items. I can see a lot of you have already entered your names in for CPE credit, but if you would like that CPE credit, again, please put in the question box your name, so we know to send you the certificate of attendance. A little bit different than the normal way we've done this. We will be also sending an email out the day after the webinar that will contain both the recording and the presentations themselves. So you'll have the ability to access them that way. And you can also access them the normal way that you've been doing, going to hub.finpro.us and the like. So I'll send out as part of that follow-up email the directions on how to access the documents there. With that, I want to dive into this. Sam Mays is going to start. Sam is the new IT director here at FinPro, and he's going to walk you through some of the cybersecurity best practices. Sam?
Thanks, Bob. My name is Sam Mays. I've been with FinPro for about a month now. Bob had asked me to come in and share some of my thoughts on, best practices associated with cybersecurity. So when I think of cybersecurity and cyber criminals, I think of kind of having a water leak in your roof, and water always takes, the path of least resistance when you have a leak. And with cybersecurity, it's the same thing. Cyber criminals try to find the path of least resistance into your network, and what am I going to do, to make sure that those paths are, limited. So to touch on the first bullet, you want to monitor your applications that have access to, your corporate data. You want to make sure that you control the access to that data. Applications are great. CRM applications, financial applications, business intelligence applications. We all need those to do our jobs, but we want to make sure that we control, the data that those applications have access to. You want to create specific access controls. So, who do you give the keys to the kingdom to? You want to make sure that, your finance group only has access to financial data and financial applications. In addition to that, you want to make sure that, at various levels, within the team, you control access to data. So for instance, your CFO may have full access to all financial data, but your financial analyst may only have access, to certain pieces of a financial application. And you can achieve that through, specific access controls. Collecting detailed logs is very important. Being able to review your logs and identify possible security breaches or troubleshooting, specific issues. It's very important to do detailed logging, especially in this day and age. You want to maintain your security patches. So I've been doing IT for about 20 years now, and in the old days, we used to think patches were a nuisance. Now it's like we have to maintain a patch schedule. We have to do it weekly. We can't let it fall behind because cyber criminals are always coming up with new ways to get in, and you have to make sure that you again, keep the paths of least resistance limited. Excuse me. You want to be aware of social engineering. Social engineering is huge. There's several types of social engineering. There's spear phishing. This is a targeted email. You receive an email, it could be, it looked like a FedEx email, saying, we need to update your password information. And so you have to understand, the types of attacks that are coming in. Consumer phishing, that's where you may receive an email, it looks like it's an Amazon email saying you qualify for a $50 gift card. You have to understand that, and educate your people that, these are not, valid emails, and help them understand, these types of attacks. Another common social engineering attack is called business email compromise. So this is becoming more prevalent. It's basically where an officer of your company or a high-ranking figure of your company will send you an email asking for information by spoofing, their email address. So, again, you have to educate your employees so that they understand that, what to look out for in these types of scenarios. Ransomware, I think we've all heard of ransomware at this point. This is where, malicious software grabs a hold of your computer, encrypts all the data on it, and then you have to pay a ransom to get that data unlocked. Very common. And finally, data breaches are very common. So we've all heard of the, banks and other, major corporations having customer and client data breached. So, being able to mitigate these types of things and stay aware of, where your holes in the network are and how to patch them. So, again, educating and training your users is very important. There's a lot of good programs out there to help your user community understand, what the common cybersecurity threats are and how to be prepared, and what to look out for in these scenarios. You want to outline clear use policies for new employees and vendors. So when a new employee starts, you want to make sure, they understand what your security policies are right out of the gate, so they understand what's expected of them and how to protect company data. You want to maintain a data breach response plan. So similar to a data disaster recovery plan, you want to have a plan. If a breach does occur, what is my response? What am I going to do to lock it down? What am I going to do to remedy it to make sure it doesn't happen in the future? It's very important to maintain compliance. Whatever industry you're in, whether it's ISO compliance or SOX compliance, SEC compliance. Compliance, for me, that's almost like the spine of your IT security, and you can branch out, from there. But again, compliance, it provides you a framework of what to follow from a security perspective. And then finally, employ a risk-based approach to security. So, doing frequent risk assessments to identify, possible security threats or, holes in your network that you need to close down. So it's very important as technology changes and, you add new systems and applications that you're doing consistent risk assessment to ensure that your corporate data is safe. And with that.
Thanks, Sam. So again, one of the reasons we're doing this webinar, and for any of you who have been on our economic webinar we just had, or even the ones we've had over the last couple quarters, that chart we have that shows all the bubbles in terms of what areas of a bank that regulators are now focusing on. And we've seen over the last 2 years, cybersecurity has moved way over and is now one of the top things that regulators focus on when they're coming in and doing exams. Many of our clients are seeing them ask more and more about cybersecurity, not only internal cybersecurity at the bank, but especially cybersecurity in relation to outside vendors that you're utilizing that are housing your data, interacting with your data, touching your data in any way, shape, or form. Anthony's going to go a little deeper into that and what they've seen and the importance of that. But it's key to know not just what internal protections you have from a cybersecurity standpoint, but also where else is your data going and what protections are available there, because your data is just as at risk when it's elsewhere with a vendor as it is when you have it internally. Another piece I just want to touch back on that Sam talked through a little bit was the detailed logs. This is critically important because when you think about any IT infrastructure, whoever is in charge of that IT infrastructure has access to pretty much everything and has the ability to go and change things. So you need to have those detailed logs so you know when someone is going in and changing something and you have the log of it. Again, especially important with outside vendors. If you're using an outside vendor system, if they have admin accounts that have access in to do different things in that system, they need to have detailed logging to be able to show you at any time when a user account of theirs was in and what it was doing, what it was touching, to ensure they're not accessing your data, they're not changing your data, anything like that. With that, I want to turn it over to Anthony, who's going to go through on his end what they've been seeing from a more of an insurance side and the importance of cybersecurity.
Great. Good morning, everybody, and I want to just thank Bob and Sam and the entire FinPro team for having us here today. My name is Anthony DeGraw, and I'm with Meeker, Sharkey & Hurley. We are a regional insurance broker based in New Jersey with offices in Basking Ridge, Cranford, and as well as Manasquan, New Jersey. Our specialty is in financial institutions. A little bit about my background: I've been on all three sides of the insurance equation. I started on the carrier space when cyber liability just started to really pop or come out and really be heavily marketed. So I've seen it from the carrier end and their capabilities. I then transitioned to the intermediary, which is the wholesale arena. So the wholesale arena is in between your carrier and your independent insurance broker. So I worked with brokers all across the country in all different types of industries, helping them place cyber liability insurance and professional liability insurance for their clients and being that expertise on the end. Now I've joined Meeker, Sharkey & Hurley. I've been here since May of last year. We've really had a good impact in the New Jersey, New York, Pennsylvania region with financial institutions as one of our specialties. And we like to get out, meet with boards, bring carriers in, and really present and get to know an organization. So with all that being said, I will jump into the presentation here. Normally these can get a little scary, but we're going to try and have some fun as well. And it's pretty funny because Sam and I didn't get to speak before this, but he touched on a lot of things that I'll also touch on, which I like because that means there's being a clear message from the IT side as well as the insurance side being told across the industry, which is good. All right. So there's 4 areas we're going to touch on today. First are what are some proactive steps to defend against cyber criminals. So I want to give you all a couple quick steps that are pretty simple, that you're probably already doing, but it's good to reiterate. So you can implement those things and really start to maybe prevent a lot of what's being caused from simple mistakes. The second area is where are data breaches coming from and how do cyber criminals get in? The third area, what questions do we need to ask as an organization or as a board? And finally, how does cyber liability insurance protect my organization? So the first thing I'd like to touch on here in the proactive steps to defend an organization, I like to say there's no one-size-fits-all for this product as well as for this area of what we all need to be concerned with. There's not one solution. There's not one IT software. There's not one IT professional. There's not one insurance product. There's not one of anything that we can just employ or put out in the marketplace and it solves all our problems and we don't have to think about it, like we can just check a box. So we have to be very careful of that. This is a multidisciplinary approach. It's a team approach. You really have to be intricately involved with everybody that's in this equation. So you have your third-party vendors that are providing both pre- and post-breach services. You need to have an attorney involved that knows privacy regulations for not only the industry you're in, but also the state you're in and then the federal laws that you're also have to abide by. Then you have IT. So you have your IT staff internally that knows your intricate systems and deals with the employees and everything you're doing internally. But it's also being recommended now that you have a second set of eyes externally. The reason for that is a lot of times the internal IT staff may overlook things just because they're involved in it in the day-to-day. They're seeing the same thing over and over, and they just may have a simple overlook. So it's also advised that external IT professionals be involved for a review every once in a while. Then you have the physical security piece. This is a piece that not many people are proficient in. I do work with a ex-Secret Service agent who's the director of forensic services at a accounting firm here in New Jersey, and he really dives into the physical security piece of getting into your organization. Once he's into your organization, what do your desks looks like? Are the drawers locked? Are computer screens covered? There's all different types of pieces of that pie that you also have to be concerned about. And finally is the insurance advisor piece. As everybody knows, there's over 60 insurance carriers currently writing this business. There's domestic, there's international carriers. There's not one policy form that looks the same as the other one, and everybody calls it different coverages, different things. So you have to be very careful there as well. All right, so some quick proactive steps. Some of these Sam already mentioned, so I won't spend too much time on it. But number one is awareness and employee training, and that's from the top down. You know, the board, the organization, the C-suite, everybody from there all the way down to the lowest level employee needs to be aware and involved in this entire thing. You can have breaches from, you know, a janitor or a cleaning service leaving doors open or coming in and stealing a piece of equipment. So everybody needs to know that this is out there. I also like to say that you need to inform your employees that if something does happen, it's okay to come to them and they're not going to be punished. Because the last thing you want them to do is not report something to you because they're scared they're going to get reprimanded. I, on the other side, would go the opposite way and say, if you do notice something and you report it right away, or you do click on something and you report it right away, we're going to give you a $10 gift card to go get coffee. I would go the opposite way on that, so they are, even if it may be something minor, they're reporting it right away so the entire organization is aware of it. The next part is strong passwords with two-part authentication. Everybody's starting to see this, whether you have mobile banking on your phone, you know, different things you're logging into. Now you're getting a text message to your phone or to a different device or a different email address where you're going to get a code, and then you have to also go in and enter that code after you've entered your password. It's just a second form of identification that you can use to make sure the actual user that's trying to log on is that person. Physical security, we talked about this, so clean desk policies. You have cameras, you're locking things, server rooms. You're just locking things up that need to be locked up. Horizon Blue Cross and Blue Shield infamously lost 100 laptops because the vendor that came in to move them from one office to the next office, their next office, stole 100 unencrypted laptops. So you really need to be monitoring vendors that are accessing your building, and then also your employees and you know who has access to what in a physical standpoint. The next piece is, and Sam touched on this as well, is an open line of communication between your human resource team and your IT team. There's been many instances out there where an employee is let go, fired, or quits, and it isn't reported to the IT team for over 6 months. And that individual still has access to all these systems or data that they used to have. And it's just a simple line of communication that once someone from the human resource, someone is let go or whatever happens to that employee, it's clearly communicated right away to IT that that person has been removed from the organization and all their access needs to be removed. So that's there's 4 pretty quick things that don't take a lot of effort that all can be done right there. Some of the next items here on this list are more IT heavy, and they specifically around restricted permissions. Sam had mentioned that as well. If you are not the CFO and don't need access to every single financial piece of data, it should be restricted down to what you need access to do your job properly. Email spam filtering, so you want to make sure that you're helping your employees as much as you can from clicking on bad links or bad attachments with spam filtering. Antivirus software and second opinion, very similar. You know, you have one set of antivirus and then you're also getting a second level or second opinion now that may pick up on things that your first level did not pick up on. Sam had also mentioned log file analysis. What that's specific, I'm not IT obviously, but what I know from that is that the standard malicious code or software is sitting on somebody's or an organization's system for over 6 months. So that log file analysis is being done daily, weekly, whatever it is saying when something looks skeptical. And then finally, as your firewalls, you have restrictive rules, content filters, and unified threat management. What are you preventing your employees getting access to? Or do they have access to Facebook, Amazon? What do they really need access to be able to do their job? Because some of those most used sites are where the cyber criminals are targeting people, and I'll get into that in a second here. So here's some data here. Are we relying too much on technology? What does the data show? Well, 81% of breaches in 2016 were due to weak or stolen passwords. Once again, that ties back into strong passwords and two-factor authentication. 60% of U.S. users use the same password for all systems they access. What's the problem with that? The problem with that is that when they have a Hotmail account or a Google account that's their personal account, they're most likely using those passwords for the same logons to get into your systems that they use for work. Well, it's a lot easier to breach someone or to track someone personally because they don't have as much security on their end as your organization does. So if they have the ability to breach them on a personal end, they then can see where that person works and, slowly but surely use their business email address plus those passwords they found out on the personal end to then affect your organization. 80% of data breaches were caused by human error or employee negligence, and that's coming from IBM. And 60% of users do not have a breach response plan. So in terms of the human error, that's where we really get into the employee training and awareness. If you're doing quarterly trainings on what to look out for, if you're talking about this with all your employees on a monthly or quarterly basis to just inform them, if you're putting incentives out there to have them report instances, you're going to cut down on this human error because the employee is naturally going to be looking out for it in their day-to-day. And here we go. Why do we do this? Why do cyber criminals act? Why are they causing us all this pain and frustration? Well, it's a billion-dollar industry. So I like to say that it's not the 16-year-old in the basement, of his mother's house hacking into your business. These are corporations that are set up in, it could be Russia, China. We've all heard the names out there that they do this, but they have office buildings. They have 20, 30, 40 employees day after single day finding this information, running data analysis on it, and using their time and this money that they now have to continuously attack you. So that's why they do it. So how do they get on the inside? And Sam touched on some of these things. I wanted to add in some funny pictures along the way here. So you have phishing and spear phishing. So phishing is just a general attack. We're going to take a generic email and we're going to blast it out to 500,000 email addresses that we have access to. Very general. Their hit ratio on that is very low. Spear phishing goes a little bit further. They're going to take more time on their end to figure out who you are as an organization, who your employees are, what are they accessing, using social media channels, whatever they have access to, and cross-referencing data, like I was mentioning before, to really target your employees or your organization. And therefore, it takes them more time, but their hit ratio goes up. Next is a standard brute force attack. So all they're trying to do here is use software to blow down your doors. There's two ways they do this. One is through passwords. So they have a list of millions of passwords that are commonly used. They have your email address, and they will just run this software program or this data through every single time until they get a hit. The second way is they'll attack your servers, and they will send all this attention, all this server data to your specific website, and they will shut down your website so customers can access their online banking systems or what may be from just getting access to your website. The best example I have of that is a couple years ago, 1-800-Flowers, about 2 weeks before Valentine's Day, they had this type of attack happen to them. Obviously, they make a majority of their income in that short amount of time, so they had to pay a multi-million-dollar ransom to stop this type of attack and give access back to their customers. So that's the best example of a brute force attack out there. This is becoming less useful with the big cloud data centers that we have now. They have the ability and the ability to handle the overload of servers, and they also have the ability to figure it out quicker and try and prevent it, but it still does exist. Next is watering hole attacks. So I was trying to get a better picture of this, so I had to get two. But you have watering hole attacks are what I mentioned before about where do your users go? Where are people spending their time and attention? It could be Facebook. It could be USA Today. It could be CNN. It could be Amazon because they're shopping while they're working. Where are users going? And then they're just sitting there waiting. Or what they do is they'll put ads on those sites that are very familiar to what the customer or the employee is looking at, and trying to get them to click their ad while they're on your business system. So it's a very good way for them to understand where everybody's going. So where are people gathering? Now let me implement different malicious codes and ads or pictures or whatever it may be, a headline to get them to click, and we'll go from there. Sam talked about this as well as social engineering, and we'll get into the confusion about where this should be covered or through insurance policies. But, you know, social engineering is the clever manipulation of the natural human tendency to trust, and there is no patch to human stupidity. Now, I didn't really want to put that one up there. It is true, but I don't want it to sound like that, you know, it's our employees' mistakes or it's our mistakes or we're just stupid. We all fall for these things. They do happen. You do want to just make sure that there's an open line of communication because you don't want an employee hiding a mistake they may have made. So I do want to make that clear. Rogue employees. This is something that through different IT metrics, you can try to prevent as much as you can, but you're obviously never going to be able to completely prevent it. You have to be able to restrict their access to what they need access to do. It's as simple as that. If an employee has access to everything and they go rogue, and it could be as simple as they lose a laptop. I mean, we've all heard examples of that. But, you know, they have to restrict access. That's the most important part there, to limit the future damages. All right, so what questions should we be asking as an organization or as a board? So I'm basing these questions off of the NIST Cybersecurity Framework, which is the National Institute of Standards and Technology, which comes from the U.S. Department of Commerce. Now, there's a lot, as Sam mentioned, there's ISO, there's all different frameworks. And one of the things I didn't get to touch on here because it's pretty new, and it's hard to incorporate all the data and stay within the time frame, but is you have the New York Department of Financial Services new regulations. So we at Meeker Sharkey have a ton of information on that. You know, feel free to reach out to us for that information. But the New York Department of Financial Services based some of their decisions on this NIST cybersecurity framework as well as the other ones out there. But first you want to identify where is your data stored physically and virtually, and what are your risks. Number two, you want to protect that data. What tools do you need? What training can you provide? And what policies are in place? Finally, the third point is detect. How would you know if something happened? That's the log file analysis. The fourth point here is how are we going to respond? What is your plan if an incident occurs? And how are you going to recover that data? How are you going to restore back to normal business operations to get that data? And that's where you're seeing all these ransomware attacks with encrypting files and servers are really playing a key in why organizations are going out and finding Bitcoin to pay these ransoms, is because they're not doing this stuff. They're not backing up their data. Or if they are, they're doing it every 6 months. So what, they don't have access to what just happened in the last 6 months. There's all types of reasons why ransomware is causing such a big problem and they're making so much money is because of these questions. So these are the questions you want to be asking yourself as a board and as also part of an organization. I tied in some additional questions here. How are we communicating this exposure to our entire organization? Do we have an open door policy with our employees? I think I touched on that point enough so far. Do we have a vendor risk management program? What access do they have to our data? And Bob was touching on that in between Sam and I. This is one of the biggest keys. Some of the largest data breaches have been from this vendors. And what do they have access to, and how are they getting in, and what are their security protocols? Do they have cyber liability insurance to reimburse us because they caused our loss? What are our vendors doing? And the next piece of this is, do we require business customers to be adequately protected? So while I was doing an initial review or risk management run through with one of the community banks we work with, I was speaking to their chief information security officer, and I asked him this question, and his response was, Anthony, I know that we are a big target for cyber breaches and hacks, and I'm pretty confident that we're ready to respond. I know it's probably going to happen, and I'm doing everything I can that me and my team can respond in the best way. However, what I'm the most nervous about is for our organization, if we loan $5–10 million loan to one of our business customers for them to expand their operations or whatever it may be, and they suffer a cyber breach, and within 6 months because of that breach, they didn't have 1, insurance, or 2, protection, they go completely out of business, how are we going to get repaid for that loan? And what are we going to have to write that off as a loss? So I think the next step that what we see is that a lot of banks and financial institutions are investing money in this type of stuff. They are educating their employees. I think the next level for financial institutions is to understand where their commercial clients are on the spectrum and educating them, and maybe even making it part of the loan process, very similar to when you loan money to a person or a family to buy a home. You're also requiring them to purchase homeowners insurance for the fire. Okay. All right, so let's get into how does cyber liability insurance protect my organization? So first, let's start with what is cyber liability insurance. So cyber liability insurance is written on a claims-made policy form, which covers wrongful acts that occur on or after the retroactive date of the policy and are reported during the policy period. So a couple quick points there. The act has to occur after the retroactive date. Typically, the retroactive date is the date you first took out your insurance policy. Could be 4 years ago, 5 years ago. There are policies out there, if you haven't purchased a cybersecurity policy, that will give you what's called full prior acts coverage. So anything that happens in the past, even though you haven't purchased insurance, they will cover any acts that happen, which is a nice plus for people that haven't bought in cybersecurity insurance already. And those acts the claim has to come during the policy period. So if you go and renew your coverage with somebody else, or you cancel your coverage and then the claim occurs, you can't go back to your previous carrier, depending on the policy language, and report that claim to them. So it's very important to have continuous coverage. In the marketplace right now, you have both admitted and non-admitted options. What does that mean to the insured or to the organization? Well, admitted policies are backed by the state in which you operate your business, meaning that if a loss does occur and the carrier that you placed your insurance with was to go under, there is a fund that is set up to pay your claims. Non-admitted, you're typically seeing for different reasons. There's different reasons the non-admitted market exists. One is based on the type of data you have. So as financial institutions, you have very proprietary data to organizations that you work with. you're in a higher class rating because of that. So some insurance companies may want to write you on a non-admitted basis, which allows them to charge rates that are outside of what a state would allow. The other reason you'll see non-admitted is because a lot of the cyber liability insurance advancements in coverage are coming from Lloyd's of London over in Britain, obviously. And what they like to do is constantly update their form as much as they can, which is great for insureds, but be able to sell that in the U.S. marketplace, they have to write it on a non-admitted basis. Being on a non-admitted policy form, you will see surplus lines, taxes, and fees charged by your state. Then your policy is broken down into two different parts, both first and third-party coverages. So we will dive into these a little bit deeper. You'll also have multiple insuring agreements, where on your standard property forms or general liability forms, you're used to not seeing too many of these. Now you'll see an insurance policy with coverages, 1 through 9. And there's no standard form or terminology, and we'll kind of get into that. But every insurance company is writing this a different way. They're calling different coverages different things, and that's why it's really helpful to work with someone that understands these.
If we could really quickly, Anthony, we had a question that came in,
Yeah.
centered around a scenario where maybe a data breach occurs, and you utilize your insurance and your policy against that data breach. Then subsequently, another either data breach or ransomware attack or something related to the first data breach occurs thereafter. The question they were asking is, does your insurance then cover that as well, or have you exhausted your insurance at that point?
Yeah.
So in essence, is it a per claim, or is it time-based based on the amount of time the policy covers it, or is it a one-time only thing?
Cool. Yeah, so I'm just going to repeat the question for everyone if they didn't hear it. So if you have a claim, and it pays out, say we'll call it $500,000 over the defense costs, also the indemnity, and then you have another claim. You get hit a different way, and these are separate and distinct instances. If they're all a similar instance, just happening over multiple months, it's going to be considered the same claim. But if you have separate and distinct instances, as long as you have not breached your aggregate limit of liability, you will have coverage. So, you could have usually what we're typically seeing with the organizations is a minimum of $3 million or a $5 million aggregate limit of liability. So as long as you haven't breached that aggregate, you will respond, or your policy respond, to multiple claims within that policy period.
Thank you.
Good. Okay. So what does cyber liability insurance cover? The most important, and we're going to spend a lot of time here, and you also have an attachment, I think, that you have access to, and you also will get, I think, tomorrow as well, that I've written up, is your first-party coverage parts. Why is this the most important part of it right now? Well, it's because it's all the expenses that you would have to pay out of your own pocket to respond to the laws and the recommendations to help your consumers that were breached. So the first point I have here is your data breach coach, which is usually a law firm that specializes in privacy liability. I believe this is the most important part of the coverage, and there's a couple reasons why. They are well equipped and knowledgeable in all the states, usually, what the laws and regulations are. They usually have a relationship with the IRS and different federal agencies, so they can communicate your loss there. They also have relationships with the attorney generals in each state, and they have the understanding to know what that attorney general is looking for. And the laws are constantly changing. So when I look for an insurance company for our financial institutions, I want to make sure that that data breach coach is allowed by the insurance company to make decisions for my insured. A lot of policies out there will restrict coverage to a certain time frames. For instance, credit monitoring is a big one. Each state has a different law. It could be 1 year that you have to provide. It could be 2 years. And different insurance policies state a different time. What I like to see is that the insurance company is giving the data breach coach the authority to make those decisions. And I had one instance where in Massachusetts, the Attorney General was coming down pretty hard on data breaches. So what the data breach coach recommended to the insured and to the insurance company was that instead of providing just the 1 year of credit monitoring services that was required by law, that they should offer an additional year right out of the gate. That, in turn, helped negotiate down the fines and penalties from that Attorney General and was showing that they were trying to do everything possible to prevent or to help the consumers that were affected. The second thing, and I kind of mentioned it there, is that the carriers are giving these data breach coaches the ability to not only file your claim, but to make the decisions. So you don't have to think, is my insurance company going to deny this claim? Are they not going to allow me to do this? As long as that data breach coach is making that decision for you, they are going to cover whatever the expense is to get whatever professional in there, which I really like. I think it's a smart move on both the insurance companies to really get you to access that. The final point, and where we see a lot of lack in insurance coverage, is that most insurance companies now will give you access to the data breach coach for a $0 deductible. So it costs you absolutely nothing to pick up the phone and call them, whether it's an incident, a true claim. They want you on the phone with them, and they're incentivizing you to do that by charging you, your deductible is waived to do that. So there's a couple carriers out in the marketplace that do that, and I highly recommend it. The next point is forensic services. This is the most expensive cost at the moment. The forensic service companies are charging upwards of $500 per hour to come in, just based on the severity and the frequency now that they're seen. They basically can charge whatever rate they want. Great reason to have cyber liability insurance is because the carrier has pre-negotiated the rates, so they can keep your costs down, obviously paid through the insurance company at which these individuals are getting paid. Then you have your privacy notification regulations. So how are we going to notify? And that's based on the state. It's also based on the number of individuals that were affected and how you have to make them aware of the situation. Next piece that you would normally have to pay out of your pocket is public relations, crisis communication, and call center services. The basis of this is, helping your reputation. We're handling this properly. We get a press release out there. It's communicated properly. And the other part I like about that is that you're getting the call center services. So the last thing you want is to put out this notice to your consumers that you've been breached, and they're calling in and getting your receptionist, or they're getting a teller, or they're walking into the bank. You want to be able to provide them professionals that know how to respond to your breach and how to accurately inform the customer of what's going on. The next part is legal review of contracts with vendors. This is something that we've all touched on here. Vendors are going to be very important in the future. They also provide credit monitoring, fraud consultation, and identity restoration to the consumers that were affected. Digital property replacement. So if you do have a ransomware attack and all of your data is encrypted, how much is it going to cost to try and get that data back? It's very expensive and takes a lot of time. The final piece of that is actually paying that ransom or that extortion to get your access to your website back, or to get access to your data back. And how do you pay for it in Bitcoin? That's another problem. So the carriers, the data breach coach, all have different access to getting all this done for you.
We have another question. It's, what is the acceptable time frame to notify customers or clients when a data breach has taken place? And are there consequences if you take too long to notify them of the breach?
All right, so the question for everybody on the line is what is the time frame to notify customers, and what's acceptable, what's too long? And the answer is there's no right answer, but I can tell you the quicker the better. The attorney generals want to see you properly respond in a timely manner. Probably one of the biggest examples of that was the Yahoo breach, and I think they took, I don't know the exact number, but I know it was at least 6 months to a year to finally disclose that breach. And as everybody knows, that affected the valuation they got, or the buyout they got from Verizon. However, with the new Department of Financial Services regulations coming in from New York State, the answer to that question is 72 hours. So if you don't have the ability to, by the time you are notified and respond properly in 72 hours, that is an extremely tight time frame. That's another big point on the data breach coach, because if you have access to that process is going to start a lot faster. If you don't have, as Sam mentioned, the data breach response plan or a data breach team or cyber team in place internally to say who are we going to call, what are we going to do, that's a huge, huge problem. And if you're doing business, if you're licensed in New York State, the answer to that is 72 hours. I was also at a conference last night that said Colorado is very quick or very close to passing similar regulations in their state. You can guarantee that California is going to be next, and we really think that this is going to these regulations are going to go across each state. But right now, the best answer to that is 72 hours.
Thank you.
Cool. So what does cyber liability insurance cover? Continuing, we have cyber crime and social engineering is another topic we'll touch on. Right now, there's a big, the insurance carriers don't know how they want to handle this. They don't know if they want to put it on a cyber liability form. They don't know if they want to put it on your commercial crime or your fidelity bond. And I'll get into the details of both of those later. Business interruption. So if you are down, if customers can't access your online banking system, if all your branches go down because of a breach or a network interruption, what does it cost you? What profit are you losing? And then dependent business interruption is kind of, we were touching on before, of who are your vendors, your cash management systems, your online banking, your cloud service providers. If they go down and you're dependent upon them, are you going to get reimbursed for the profit, the net profit that you're losing? Third-party coverage parts. So who are you going to have to pay out to others, or what are you required to? So damages, compensatory, punitive damages, and any settlements you enter into. Regulatory fines and penalties from both a federal and state level. Consumer redress funds. So these are funds that, along with your fine, they're saying you have to set X amount of dollars aside to make sure that you're cyber compliant or data breach compliant with the laws for 3 or 5 years. I've seen this on healthcare institutions as much as $3 or $5 million additionally that they have to set aside in a fund and make sure they're using it for these measures. So your payment card losses, assessments, fines, penalties, and chargebacks, and you also have a piece in there for media liability. So along with your advertising and content strategies that you're doing on social media that result in libel or slander. So common coverage gaps found in financial institution policies. You have pay on behalf of wording versus indemnification wording. I prefer pay on behalf of wording, which is basically getting back to the data breach coach and authorizing them to make the decision, and the insurance company is paying the loss right away, and you're paying your deductible or your retention afterwards. The indemnification is they want you as the financial institution to pay the loss or to pay the everything out of your own pocket, then you get reimbursed by them. There's been some bad cases. The most notable is P.F. Chang's versus Bank of America and an insurance company where P.F. Chang's paid out what they thought was proper in the loss, and their insurance company came back and said, that's not a covered loss. We're not going to pay for it. So I prefer, for my insureds, the insurance company paying the money out front, so there's no negotiation. It makes them make a decision quicker on if it's a paid loss or not. Personal information versus corporate information. Believe it or not, a lot of the cyber liability policies out there are only covering personal information, which is great for some entities, but for financial institutions, you have a lot of corporate data, corporate information that is proprietary. So if that's not specifically named in your policy, are they going to cover it? It's a great question. I always make sure that we get that information logged back in, or that coverage back in there. You'll always have a bodily injury exclusion on your policy. What I'm looking for here is that they carve it back for mental anguish and emotional distress, because you know the plaintiff attorneys are going to bring that. You know, I lost my credit, or my credit's all messed up. You know, this is causing me mental anguish or emotional distress. We want to make sure there's coverage in there for that part of the suit. Carve back in coverage for rogue employee actions. So we want to make sure that rogue employees, if they do act, you're going to have coverage for it. There's a lot of policies out there in the marketplace right now that aren't going to cover these acts because it's fraudulent, really, and the insurance companies aren't in the business of covering, you doing, an insured doing hurting themselves. But at the end of the day, the organization can't prevent these, so we want to make sure that the coverage is there. There's exclusions for if the breach is caused by a vendor. Obviously, that's not what we want to see because a lot of the breaches are being caused by vendors. Worldwide coverage. So if you have clients or you're doing business worldwide, the European Union has a lot stricter laws than we do. So you want to make sure that if a wrongful act occurs anywhere in the world and claims are brought anywhere in the world, that you have coverage and defense there. You have your insured versus insured exclusion. So you want to make sure that if employees' data is taken, then they are also covered. So a lot of policies will say, because you're an insured, we're not going to cover you because you know about this policy. Well, a lot of your employees don't know you have cyber liability insurance, and they do business with your bank, or they have their personal assets with your bank. We want to make sure that they're being covered as well. And then you'll see commonly exclusions for unencrypted mobile devices. So if your organization provides laptops, phones, or tablets, and they're not encrypted, and there's a breach, the insurance company can rely on that exclusion to not pay your claim. So we have some more here on specific coverages. I'm going to quickly go through these. What we typically see is we want updated policy forms. A lot of policies in the marketplace are from 2012. That's not good right now. Social engineering just developed over the last 2 years. We need to see constantly updates on these policy forms. My biggest pet peeve is sub-limits across different parts. So you'll have a $5 million aggregate liability, limit of liability, and you'll see $1 million for forensic services. Whenever you see sub-limits, you have to be cautionary because the insurance companies know they're going to pay a loss in that area, so they want to limit their loss. So you got to be careful there. Another one I see a lot in financial institutions is the business interruption waiting period is 24 hours. So you have to be down for over 24 hours before they're going to start to cover any loss of profit. We want to try and get that down to 8 hours or 6 hours, as low as we can. You're also seeing hourly restrictions. So there's a carrier out there right now that's prominent in the banking space that'll cap your per hour loss of profit to $500 per hour. We don't want that. There's no reason to have that. You should have access to your full limit of liability that you're paying for. Social engineering, crime, fidelity bond. So there's a lot of confusion out there on what this is. You'll have funds transfer fraud. So you have to think about it in two different ways. When the criminal is doing the actual transferring, so they're breaking into the system and they're wiring the money, the criminal is, that's when it's going to fall on your crime policy form or your fidelity bond. When the employee is doing the wire based in their normal business functions or business duties, that is no longer a crime. It's something that they were doing within the scope of their duties, and the insurance companies and the policy wording out there says that's not going to be covered in your crime form because it's not the criminal doing it. The employee is doing it willfully. So you have to be very careful between the distinction of those two coverages. And finally, as directors and officers, you're going to be held liable for For all of these regulations now, you're going to be held liable to understanding what is the organization doing to protect against these. And they know everybody's not going to be perfect, but they need to see proactive steps. So as a director and officer, I would be asking these questions. So evolutions, insurance carriers are now providing employee training. If you're an insured of theirs, that's outstanding, and this is, pre-breach. They're also providing access to password management softwares out there for free. This is all for free. You don't have to pay for it. It's included. And you're also, like I mentioned before, getting negotiated rates on a national level if you do have a breach from all of those vetted third-party vendors. Notification costs are decreasing. IT forensic costs are increasing. Policy forms are constantly being updated, and new markets are constantly coming to town, both from Lloyd's of London and also domestically. How do they underwrite it? This is a quick overview. It's going to be your class of business. So are you a financial institution? Are you a healthcare organization? Are you retail? Then they're going to go into your revenues. That's what they use as a rating basis. Then they're going to look at your numbers of records. A number of record is a name, a first or last name plus an identifier, so an account number, a social security number. You need both of them. They're going to look at your risk management techniques. What are you proactively doing? And the final piece that we love to use is the relationships. So at every one of our financial institutions, we bring in the insurance carrier that you're going to do business with. We want them to be comfortable with you, and we want you to be comfortable with them and their services. So now that you know, what can you do? I'm kind of running out of time here, but you can develop and implement policies, invest in awareness training, develop an incident response plan as well as the team, and you want to work with a cyber liability specialist to secure the correct insurance coverage. Tips to get started: train your users on how to defend your data, acceptable use policies. A lot of this Sam touched on, so I'm going to kind of skip over this. We talked about this. Key takeaways: the best defense against cyber threats is awareness from the top down. The worst thing anyone can do is pretend it won't happen to them. Design your policies, controls, and plans for when a cyber incident will happen, not if it will happen. And trust no one. And that's kind of cynical, but what I really mean by that is, these criminals are going to use your mom, your dad, your daughter, your son, anything they can use from what they're gathering from the web to try to get you to go against your human instincts and use those to your disadvantage. So just be careful. When you see some fuzzy word in an email, take a second look. When you see an attachment that you weren't expecting, or an invoice you weren't expecting, take a second look. You can always hover your mouse over an attachment as well as a link before actually physically clicking to see where it's going to go. So take that extra second to just hover your mouse, hold it there to see what that looks like, what that path looks like. And as always, if something looks fishy, reach out to your IT team or reach out to a professional. The DNC hack, which we've been made very aware of for the last 2 or 3 years now, is famously caused actually by an email that one of the staff members got. The staff member took the email, went to the IT team and said, "Hey, this looks fishy." The IT team responded back, "It's fine." And then that's how it all happened. So even your professionals internally, you have to be careful. Everybody has to be looking at this. And with that, there's my ugly mug, my contact information, and I want to just thank FinPro again and everybody on the line for having me here.
So I encourage everyone, if you have any questions that we did not get to, or you want to dig a little further into, please reach out to Anthony. He's available. He'll be able to take your call and answer those questions more in detail. I just want to touch on 1 or 2 quick things before we end related to what Anthony was talking about, and specifically how it relates to board members. Like I said earlier, regulators are looking at this. They're looking at this in increased frequency and with a much sharper eye. They're looking for credible challenge. I know you hear that from us all the time. It's still holding true. They want to know that the board has an idea of what's going on at the bank from a cybersecurity perspective, and that they're providing some credible challenge around what the bank is doing in terms of disaster recovery policies, data breach policies, what insurance they're getting. They want to know you're not rubber stamping what IT is telling you should get, but that you as a board are digging into it, understanding it, and then approving it because it's what's going to be best for the bank. What Anthony said is completely true. Board members are liable for what happens from an IT security, cybersecurity perspective. So make sure if you don't have anyone on the board who understands it, get yourself trained, bring somebody onto the board who already has that training, but make sure that it's not only the IT staff of the company that understands it, but you have some type of outside overview that can provide that credible challenge and show the regulators that you're looking at this as in detail as you need to be. Cybersecurity is just like everything else you do at the board level. It's just another risk. Anthony touched on this as well. It's not if something's going to happen to you, it's when. That's the unfortunate reality of the world we live in. So you're going to see cybersecurity is going to become as expensive for you probably as physical security was in the past. So you got to make sure that you have the plans in place to deal with it when it happens and mitigate that risk as much as possible. The regulators are smart enough to know there's nothing you can do to completely remove the risk of something like this happening. They know the important piece is that you're doing everything in your power to mitigate that risk, just like you are in all the other areas of the bank. Again, if there's any other questions that we did not get to, please reach out to Anthony. He'll be able to handle those questions. And if you have any questions on policies, et cetera, they'd be happy to take your calls on that and walk through it. With that, thanks again for attending. We have another webinar coming up next week. Everyone who is registered, we hope to see you there. If you're not, please visit our website and get you registered. You should all be receiving an email within the next 24 hours that will have the recording of this webinar, all of the handouts which are available right now in the handout section, but they'll also be linked in that email as well, so you can pull down each of the pieces, Anthony's presentation and some of his best practices documents and the like, as well as his contact information. So again, thank you all for attending, and enjoy the rest of your day.